Assalamualaikum and good evening everyone. My name is Ainisha binti Zainuddin with matrix number 01D8021F1062.
I am Marini binti Kalim with matrix number 01D81F1059.
My name is Teng Li with matric numbers 01D81F1050.
And I'm Arvin Unlucky Muthusamy with matrix number 01D8021F1057.
Okay, so today we will present to all of you about problem case of DPA50153 Audit 2. Okay, next. Okay, so here is our table of content which we have case 1, case 2 and also the references. Okay, next. Okay, firstly, I would like to present to all of you about case 1. Next. So here is the information given for the case 1. Okay, so using the information above, we are required to identify and explain the ethical and professional issues, raise and recommend any action which should be taken in respect of the matter described by the audit senior. Okay, next. Okay, next let me move to the first situation, which is that we got from the information given. Okay, so for the ethical issue that we got is, firstly, audit team has been unable to identify a clear timeline relating to the offer and bidding process in relation to the contract. So for the professional issue is lack of clarity could impact the reliability of financial statement as it might affect the recognition of revenue and related expenses. So what action should be taken is auditor must have objectivity. So what's the meaning of objectivity? Objectivity means that internal auditors exhibit the highest level of professional objectivity in gathering, evaluating, and communicating information about the activity or process being examined. So, auditor must have objectivity to conduct a thorough and independent audit of the contract process, examining the criteria, decision making, procedures, and stakeholders involved. Okay, next. Okay, next let we jump to the second situation. For the second situation, the ethical issue is large unidentified payments were made during this time which are later traced to individuals linked to overseas government departments. So for the professional issue, failure to identify and disclose such payments could result in misstated financial statement and a failure to comply with relevant regulation. So for the action, the auditor should ensure accountability. So accountability means that refers to the responsibility and obligation of auditors to ensure the accuracy, completeness, and fairness of financial statement and reports. So a thorough investigation must be launched to identify the sources and purpose of these payments. This investigation should involve relevant authorities such as internal auditors, law enforcement, and independent investigative body to impartially. Okay, next. Lastly, for my part is situation 3. For the situation 3, the ethical issue is purchase order were raised at the instruction of the finance director, which cannot be cross-referenced to an approved supplier list. So for the professional issue, inclusion in the payable ledger without cross-referencing affect the accuracy of financial record. So what action should be taken is the auditor should have competency. So competency here means that internal auditors apply the knowledge, skills, and experience needed in the performance of internal audit service. So the auditor should implement and standardize system for cross-referencing purchase order with other relevant documents such as invoice, receipt, and contract. So that's all from me. I will pass the presentation to the next presenter.
Okay, thank you, Aini. So next, I would like to talk about situation 4, which we identify the ethical issue is the subsidiary company paid significant penalties for the breach of environmental laws and regulation due to exceeding levels of carbon emissions and breaching industrial waste disposal regulations. So the professional issue is the misclassification could lead to the distortion of financial statement and a failure to provide a true and fair view. So the recommended action to be taken is to correct the misclassification, impose appropriate penalties, and consider financial reporting implications. The auditor should evaluate the adequacy of the internal control system and make recommendations. So next. So the fifth situation is the director failed to take appropriate steps to stop this happening repeatedly during the audited period. So the professional issue is the directors have a responsibility to prevent illegal activities that can impact the financial statements and public perception. So the recommended action to be taken is to encourage the management of subsidiary company to take prompt corrective action in order to adhere to environmental requirements. So this also consider the implications on financial statements and report to regulatory authorities if necessary. Next. Okay, so the last situation that been identified is the auditor has been auditing the group companies for the last 3 years and have never come across this behavior in the past shows that the auditor had intentionally hiding penalties to manipulate financial statements that breach ethical standards. So the professional issue is the misleading financial statements undermine the auditor reliability and can lead to legal consequences. So the recommended action to be taken is to report the attempt to manipulate financial statements to higher management and the board of director BOD, and also consider the need to involve external auditor or regulatory authorities in the auditing process. That's all from me. Thank you. Next, I would like to pass to Tang to continue the presentation.
Thank you, Marini. Now I will continue with case 2. Next. Based on the situation given, we are required to present in line with ACCA Code of Ethics and Conduct, clarify and explain the factors that must be considered before the internal audit engagement should be accepted. Next slide. The first factor is independence and objectivity. We must rigorously assess our ability to maintain independence and objectivity in the audit process. The long tenure of the audit engagement partner at material company coupled with her son's appointment and potential shares could introduce threat to our independence and objectivity. It is essential to identify and implement safeguards to mitigate these risks. Next is longevity of engagement. The partner's 8 years tenure raised concern about objectivity. We need to evaluate whether this extended relationship might compromise our professional skepticism and independence. Safeguards should be established to address potential challenges arising from this long-term engagement. Next. After that is conflicts of interest. The appointment of the partner's sons as a sales manager with share in material company creates a clear conflict of interest. Furthermore, the proposal fee structure tied to the company's profit after tax may exacerbate the conflict. It is crucial to assess the effectiveness of safeguards in managing and mitigating these conflicts. Then is fee arrangement evaluation. The proposal fee structure with at least 20% based on the company profit after tax raised concern about the alignment of interest between energetic and company and material company. This alignment could potentially compromise our independence and objectivity. A thorough assessment of the fee structure's impact on our ability to adhere to ethical standard is necessary, along with consideration of any required safeguard. Next. Okay, next is distinguishing roles of internal and external audit. It is imperative to clearly differentiate the roles of internal and external audit. If we are appointed for both roles, we must ensure that these functions remain separate to maintain objectivity and independence. An evaluation of the proposal fee structure impact on this distinction is essential. That's all from me. Now I will pass to Arvin.
Thank you, Tang. So next factor that must be considered before the internal audit engagement should be accepted is ongoing monitoring and reviewing. Establish a mechanism for ongoing monitoring and review of the ethical considerations throughout the engagement. Regular assessments of the effectiveness of safeguards should ensure that independence and objectivity are consistently maintained. Next factor is alternative to internal audit. So we should explore whether alternatives to energetic and core taking on the internal audit role exist. If other reputable firms can provide internal audit services, it may be preferable to avoid any preferred conflicts that could arise from acting as both internal and external auditors. So next factor is competency for internal audit. Prior to asserting the internal audit role, Energetic and Co should assess its competency and capabilities to perform internal audits effectively. Adequate resources and expertise should be available to meet the demands of internal audit services. The, the next factor is disclosure and transparency. Transparency is disclosing the potential conflict of interest related to the engagement partner's son is essential. Communicating this information to Mutiara Co's board ensure transparency and provides an opportunity to mitigate potential threats to independence. Last factor is perceived threats to independence. It's important to consider the perceived threats to independence arising from the engagement partner's son's employment. These threats must be documented, assessed, and the significance determined. Appropriate safeguards should be established. So for conclusion, the decision to accept the internal audit engagement should be underpinned by a comprehensive evaluation of ethical consideration, independence, objectivity, and conflicts of interest, differences between internal and external audits, fee arrangements, and other ethical dimensions must be thoroughly assessed. Adhering to ethical standards is fundamental to maintaining the integrity of the audit process and preserving stakeholders' trust. So thank you. This is our reference. Thank you. That's all from us today.